How's it going, everyone? Welcome to the weekly trading review for the week of July 7th. Hope you guys are having a great day. I took a lot of trades this week. Let's first get into the market analysis, what was setting up. I'll talk about my swing trades, then my day trades, and finish off with the open swing positions. So, first thing on a longer term technical basis here, I am mildly bullish on the market. We got this deep drop from the tariffs. We managed to recover that drop and make a new all-time high where the market is currently compressing. So mildly bullish on a longer-term basis, kind of mildly bullish on a medium-term basis as well. Just going to reset this here a little bit. So I know it's a little stretched, but yeah, market has been just making new highs, higher highs, lower lows. We got this nice leg up from the 23rd all the way to the 3rd, and then the market was compressing for this week. So during this week, we have started off with a little bit of a dip, and the market came back to challenge this all-time high back on the 3rd. So it was started off as a bullish week and then finished off as a more neutral week as the market opened at 623.36. Closed at 623.62. So yeah, didn't really move a whole lot this week, right? 30-cent net movement, but it has held the 8 EMA, and it still is making higher lows. So this tells me that this breakout over here is poised for the upside more than the downside. So I'm slightly more biased to the upside here, but if the market does roll over, I wouldn't be too surprised here if we saw some sort of pullback. We did have some news over that first week, not last week, but the prior week, with some unemployment reports, with the ISM services. The week after that was fairly light, not really a lot of major news coming in. Market is waiting for earnings, which is coming out this week, starting with bank earnings. We got CPI tomorrow as well, and then we got a whole slew of earnings for the rest of July, finishing off with the mega cap tech earnings at the late July and early August. We've got NVIDIA earnings after that. FOMC statement at the end of July. We'll also get the first look at GDP at the end of July for Q3. So definitely a big month in July. And then after that, we might get to the summer doldrums, see some weakness in August. That's pretty seasonal. And we may get a more of a pronounced dip potentially during that time. But we'll have to wait and see. So that's sort of the outlook right now. But in terms of this week, it was mildly bullish and then finished off slightly more neutral. So let me get into the swings that I took here. And just as a reminder for this week, I had a couple of focus on my swings, and I'll get to the focus on my day trades later. But first is increasing by max risk. So instead of 1% or $300, bump that up to 1.5% or $450 of max risk. So just basically increasing my size on the trades. I'm going to make this a little bit bigger so it's not as cramped. The second thing is just bidding lower on breakouts. So when the stock, breaks out, I'll pull up PLTR, or I'll pull up GDS since that was a trade I took. But when it breaks out, all right, I get a much better bid earlier in the breakout candle, and then I can get a nice price closer to support, and just basically higher profits, lower risk. And the second thing is holding out longer by scaling out 1/4 at a time. I did a lot of, I think, 1/2s and 1/4s, but overall, yeah, the 1/4 at a time, that's sort of the goal here. So that was my focus on the swings, and also not really taking any SPY trades or any debit spreads. Keeping away from those right now, just focusing on either shares or deep in the money calls and puts. So first swing I took was GDS, and I took this on Monday. So here was the setup on Monday. This is a Chinese stock, so had a big run up, pop up, earlier in the year, fell back down to earth, and then it was just grinding higher, made this higher low, higher high, popped out of this nice little compression through some resistance here and also into this gap. So there was this earnings gap here around $30.50. It had popped up over there, and then it closed into the gap pretty well. So I was bidding on this stock at 32.68, so just kind of right at the gap. Here's the gap over here. If you look at this high, 32.68, so that's where I was bidding. Stock, when I got the bid, I actually got filled on the open at 32.18, so got even more favorable bid. And then the stock kind of compressed for a couple of days. Now, my goal here was lean on the 100-day SMA as support and target this gap fill, close at 35.58. That was my target over there on GDS. So the stock compressed over here. I went long 100 shares. So if I could take a $4.50 hit, $4.50 move lower, which would be a break of the 100 SMA, and my upside of this time was about $3.50 higher. So getting a nice 1-to-1 there on the risk reward. So it was compressing for a couple of days, and finally caught up to the 8 EMA, tested that level, and then we got a bounce up on the July 11th. So I scaled out 1/2 on the open on July 7th, and then I scaled another half once it hit the high of this level here, this high of 34.23. And then I scaled another half closer to the end of the day. So let's zoom into this M5 chart. And it looks like it actually continued up today and actually got to, pretty much hit my profit target. So needed to give that one another day, it looks like. But yes, so got in here. And just on intraday basis, you can see it's kind of chopping. It's compressing. It's not doing too much. Gets to the gap, gets smacked down. Into the gap, smacked down. Into the gap, smacked down. So we popped up over here. I decided to take some gains right over here at 33.18. So just I took 1/2 off at $1. Stock was rising up, and then it hit some support, I think right over here. So I got the next chunk out at 33.88. I took out another 1/4. And then pulled back over here, found some support, and then was starting to inch up higher before it started to kind of weave lower here. So then I got out, I think I got it around 34.03. Yeah, 34.04. SPY was rejecting off the high of the day at that time. And, was starting to slow down over here, potential little double top. So took some gains over here. So overall, my scaling out worked pretty well. I ended up taking $138 on the trade versus, just sticking to and getting out the entire trade at $1. So if I scaled out the entire thing over here, would have been a $100 gain. And so I got the extra $38 from scaling or, slowly scaling out of the position. And I also got, let's say I chased over here, right? And I took this trade at its high. Where was this high? Right, so let's say I took it on the close over here, 33.93. That means I would have not taken as much profits, right? I basically got an extra $60 from just bidding better on that one. So pretty happy with that overall. I think it worked out pretty well. And honestly, I think looking back on this, had a chance. It didn't finish hitting resistance and hit my that gap fill. So I had a chance to get even more profits on this. So what I'd probably do is maybe scale out 1/2, maybe scale out a quarter here, and then another quarter over here on this double top, and then wait another day. So instead of scaling out the 1/2 initially, maybe putting in the quarter. So I'm going to add that to my notes. So again, what I would do if I were doing the trade, I'd do 1/4 here, double top 1/4 here, breakout, another high, right? Maybe another 1/4, and then as it comes back and tests this high again, all right, maybe I get another 1/4 over here at 35.18, and then take out the full profits on that trade. So next 1/4 on the open. Okay, so that was GDS. Next trade that I took was PLTR. A lot of people took this one last week. Ended up being a great trade. Another one that I actually could have held a little bit longer. Okay. So PLTR, nice bullish trend here. Came back, tested at a VWAP E. There's this upward sloping trend line as well coming into play that it bounced off of. And then we got a nice little breakout over here on July 7th, closing at 139. So on PLTR, I like that. I wanted to bid at 137, which ended up being, or was it 8 EMA? Yeah, just above the 8 EMA. So got a nice bid at 137. It poked in, came back up higher, poked the 8 EMA again, poked up higher here. And my first target was the high of this candle. You can see this high is 144.97. So I had an order to take out 1/2 of my shares at 145. So I took gains over here at 145, and then I gave it a day to see what would happen. The next day, came back over here, couldn't really do too much, so I took some remaining gains at the next half at 143.61, since it wasn't really unable to get through that resistance right then and there. So yeah, again, this would have benefited from holding another day, but I will put that for the walkaway analysis. My original target was actually this high, maybe around 147, which would have been a $10 move in the stock that I could have captured, which would have been a nice 1% gain on that overall in the swing. So maybe a pattern here. Might need to trust my targets a little bit more, but my scaling out has been working. So I'm gonna try to push that more as I improve. All right, so that was PLTR. Next one I took was an open position, so I'm gonna get to that in a second. I actually took PCT. I think Dan had called this one out in the one option chat room, so thanks, Dan. I really like this setup on PCT. Nice bullish chart, breaking out of compression over here to the upside. So again, right, bidding better on PCT if I can. I got a nice fill. Broke out on Monday. I got a nice fill on Tuesday the 8th. I got the August 15th $12 call, the 12 call, which is over here for $3, and I got I believe I got 2 of those. Yeah, I had 2 contracts of that, so that way I could scale out of the trade. So it was pretty good, and I was targeting this high over here at 1544, or what is this high? 1547. That's what I was targeting. So yes, stock broke over here, tested it on this pullback. I got my fill, moved up high over here. Also, there was this AVWAP coming down that it had broken through, tested that level as well and bounced off. Then we got a nice poke above on the 9th, and that is when I took my trade. I took some profits on this high over here at 15.19. So I took so I got 2 contracts, each for $3. I exited the first one for $3.70. Exited the second one when it made a nice long candle on the 9th for $3.95 when the stock was at 15.50. So let's look at this chart really quick on the intraday, just because I want to show, the candle I exited on. So, got out, 15.50. It was hitting this level here. So Took some small gains, took some partial gains here. Nice long green candle here, testing this level at 1547, which is my target. So I was like, all right, I'm gonna take some remaining profits on this target, and I'm good. So it poked up a little bit higher. I had a chance to get to maybe $4. Pulled back and then made a nice move again yesterday, or the next day, poking up higher. So could have pushed this maybe to 410 ish, but again, instead of getting both of them out at $3.70, I made the extra $25 by sticking with PCT, and that was a nice $165 gain. So was a nice win on that guy. Yeah, again, better bid, scaling out, so just got the extra profits from there. Still looks pretty good. It's holding that D1 level, and it may pop out pretty soon. So actually, before I forget, let me set an alert for that. All right, next trade I took was MongoDB, and this was a loss. So this is also another one I think Dan called out, but I'm going to talk about why I didn't. I mean, obviously a loss, which is why I didn't like it, but there was kind of a theme this week when I took a lot of trades. I took 14 trades this week, and I think this was one of. There's this and 1 or 2 other trades that I felt like, I was kind of jumping the gun a little bit. Maybe not vetting the D1 chart, and maybe because I was jumping in quick, didn't have a solid plan. So MDB, here's a setup here. Pretty decent setup, honestly. Like, it had a nice bullish channel. It had jumped up the gap to the upside, tested, filled the gap here, and was rallying. This rally was fairly weak compared to this leg lower, but we were into this nice earnings gap. There's this election AVWAP coming up over here. The other important thing is that we actually had a pretty decent trend line, I believe, coming up. Let's see if I can draw it. That one was breached. That's probably not a super valid one because it's coming from an earnings candle. Yeah, but that is that's the trend line I saw afterwards, where stock is just kind of chopping around. So I entered. It was here. I entered on a bid lower that day at about 216.30. So I was long 30 shares of SPY. Had broken above this compression, and it had poked above that AVWAP-E. So you can see the high of the day for this stock is 217.21. So I got on a little bit of a dip, but not actually a mega dip. Probably a better price I would have bid at would have been this AVWAP-E at 214. So stock came back over here, and let's look at this M5 chart to see what was happening. But first mistake I made was actually I sized this a little bit too big. I meant to size it for actually half the number of shares, so I ended up sizing it a little bit too high at 30 shares. So I was planning to be able to take the loss. I think 192 was the loss. So when I entered at 216, maybe 217, let's call it a $25 loss, which meant I should have scaled about 22 or 23 shares. So kind of did the math incorrectly on that one. Size a little too big, which meant that my max loss would have been a test of this SMA versus an actual break of this SMA. That would have been hard for me to stomach. So that was MDB. And yeah, let's look at this M5 chart. So basically, right, stock had broken up over here. I got into this pullback, 216, pretty nice. Rallied up, closed nice high in the day. Massive long red candles on heavy volume selling, right? And then we actually got a really strong move back up. And I think this is where the better bid would have helped, where if I actually had bid at the AVWAP because I knew we would have tested it, bid at 214, and I would have had a chance to scratch out of my position after seeing this really big and strong move. And the fact that when we couldn't start to get over this, I could get out of the position because this really shouldn't have happened on that kind of stock. So a couple mistakes, but overall I would say one, just rushing into that trade and not having a plan. Two, I could have bid better, which would have enabled me to scratch out of the trade. And that would have saved me the loss. So I ended up taking a $250 loss on that. So I was still up for the week given my other swings, but yeah, definitely took a pretty sizable chunk out of those winnings. So unfortunate, but happens. Okay, so next batch of stocks, I am going to go into my day trades. So just going to go and filter my journal. Okay. So four day trades this week that I closed intraday, and there was a couple that I actually that I took and held as overnight swings, which I'll get to in a second. First one was Meta long on July 9th. So let's pull up this chart. And let's get to the market on July 9th. All right, so we had this gap up overnight on some news. Then we had some selling into the gap, which stalled, and we started to get some support. So pull up Meta over here. You can see that Meta was that I took it as a relatively strong long because it held up pretty well versus this move leg lower. And this leg got us a chance to find some relatively strong stocks that produced a nice trend to the upside. So I'm going to zoom into the 7.5 chart on Meta. You can see it's a pretty strong D1 near the all-time high. Yep. So here was Meta, pulled back over here, pulled back into VWAP over here, and then it broke this upward sloping trend line on a nice long green candle. So this was a nice signal bar at 1120. And you can see here is the market at 1120. So I took it over here. Now on a market basis, right, you can't really go long SPY because this trend is still too strong. But what I saw was that, all right, well, we have this trend. It started out strong, and then it's kind of choppy. There's some buyers in here, some decent volume, but it's sort of stalling out. This gap fill is here. So I'm okay with holding SPY into this gap fill, and I expect this to kind of hold. There's also a couple of AV WAPs, I think like one here, maybe like one sort of here that it was testing and it's sort of bouncing around. But it took it here at 1120, and I figured like, all right, let's go back over here. So Meta at 1120, looking nice and strong relative to the market. Pretty choppy, right? There's going to be some retracement. So I can probably bid at like half of this candle maybe and get a pretty nice fill. Maybe even, definitely a third, but I can probably bid at half. So I think I ended up bidding, and also look, the market still may have a little bit more downside to go to, which may drag price down a little bit lower, right? It could maybe get here, something like that. So I got my fill at the 11:30 candle. Yes, I got my fill at 734.50. I was long 30 shares over here. Actually had a nice bid all the way down to 734. So had maybe a little bit better bid on that, but still pretty good. And then pushed up, rallied here. We got a smack down at 11.50, and then we pushed back up again at 12. And I was bidding for like maybe $3, so something like 737.50 would be nice. That was like a nice passive target, but I felt that like given this strength in SPY. Given the SPY was holding the gains here, we have a chance to rally. This stock has a chance to rally. I felt like I had a chance to stick with the stock for the rest of the day. And then it was kind of stalling out over here near the high of the day. It wasn't really able to get past the 737 level. So I ended up exiting at this 12.25 candle right at 735.29. So kind of a small gain of 79 cents, which is tough. So it ended up being like a scratch / tiny win, but didn't quite have the strength to pan out here. I think the better move for me would have been to take gains into a long green candle where I would take in some nice profits. You can see this high here almost got to my target of $3, fell just shy. Stock made one more push up over here and actually would have ended up hitting it just barely. So yeah, that was meta. I mean, I think it was a great entry. Stock kind of stalled out here, and I think also after this long candle, that's probably your clue to get out of the trade. So I felt I got out of a losing trade that ended up turning around. Another entry maybe later in the day here. You get a push up. Yeah, no dice on that one. So yeah, I mean, kind of a choppy stock. Didn't end up stalling out, even though the market grinded up higher. So that happens. Just got out of that trade time. And the nice thing is, even because I bid better, I would have plenty of chances to scratch out of this trade or take some sort of gain into this trade. So, yeah, just didn't pan out. I think hit and run may have been ended up being a better strat on this one, where you could take $2.50 maybe. But is what it is. Happy to take, small win is still better than nothing. All right. So next trade that I took was MSTR, and I took this on the 10th. So we got the setup right here on the 10th. SPY flat open, dipping over here. And during that dip, I was looking for some strong stocks. So that's the 8th. I think I went back too far. There we go. So here we go. Yep. So really nice setup. This MSTR compressing over here. It had broken out of that compression to the upside, while SPY was also getting above its 8 EMA, getting through this downward sloping trend line and joining this kind of longer term trend. Nice upward sloping trend line and channel that it was forming here at 10.10. So I was like, all right, well, here's that break at 10.10. We got the break at 10.15 here. So I figured I can probably get a pretty nice better bid on MSTR. So instead of going long at this high at 4.19, I'll get in at like 4.18, right? That's a nice, 1/3 of this candle. This stock can take off. So figured, all right, I can probably get in the nice upper third of this candle and be in good shape. So got this bearish engulf over here. So got my fill on that. Test this low. So I was like, all right, well, that's not exactly what I wanted to see in meta, especially when market's putting this nice long green candle. So it's kind of testing up higher. And I was like, look, I want to see this red candle get erased pretty quickly as a day trade. Otherwise, I'll probably look to scratch out of this trade. Didn't like it too much. So we're rallying up higher. And yeah, market's rallying. It's making this nice move higher, testing this high of the day. And if I look at MSTR, right, just not really responding in this rally at all. So I exited at 4.15 for a $3 loss. Now, I only went long 20 shares here, so I was willing to take a pretty decent move against me in MSTR. I think a $15 move against me is what I was sized for. So took a small loss on that, but it did count as a loss in my books, and ended up working out over time. But because it was a hit and run trade, I wasn't too pressed about it. Yeah. Again, you had a chance to maybe scratch out over here. But again, the better bid saved me $30 on this trade, so happy with that. And, I had a good, clear game plan that also saved me some gains. So instead of being long at 4.19 and taking heat all the way down to 4.11, save myself $1 on that per share. All right, so last stock, which I had 2 trades on for Friday, was ANET, A-N-E-T. So, market gap down, ANET flat open, nice long candle, held half it, and then broke up higher. If you look at this D1 chart, pretty nice D1 chart, kind of choppy, but grinding higher and holding that 8 EMA after this breakout earlier in late June. Okay, so And the market made a new high of the day here at 10:15. That is when I went long a net. I got in at 10:08.75. So we got this breakout candle here at 10:05. I didn't want to chase, so I bid at maybe the upper. We got some follow through here. So I think I bid at the open of this candle. So I went long 75 shares at 10:08.05. Had a chance for maybe a slightly better bid on that. So maybe that's something that I could have improved on. And then was kind of chopping around, right? Here's 10:05, and then here's the market at 10:05, right? So it made a new high of the day early, which I liked. Didn't respond to the market. Market's starting to stall. Not really going anywhere. And then we got this bearish cycle starting to happen. So I was like, all right, well, it's not really going anywhere. I'm going to scratch out of this trade. So I scratched out of the trade at 10:50. Exited at 108.60 for a scratch. And I was like, look, I'll wait at this bear cycle here. We got this gap lower, got this move higher. That was nice, but this stock didn't participate, so this could easily go against me if the market, doesn't do well. So market pulls back here, kind of pokes through VWAP here, so I'm feeling good, and then we're starting to climb up higher at 11:30. So if I look at ANET actually held up pretty well. It was compressing. I was like, all right, look, I was hit and run. I didn't want to be long that stock in that situation, so I got out of it, started to break out over here at 10:25, so I got back in another 75 shares, but I didn't chase at the high of the day at 109, or 109, what is this, 109.32. I bid at 109, which was right kind of the open of this candle near the 8 EMA. Got my fill on the 11:30 candle, poked up higher over here at 11:40, and this one decided, and I maybe can't explain why, but I just took 25 cents here. Given that, market shot up higher at 10:40. This stock already hitting some resistance at the high of the day. So did a kind of a tiny trade, made up for the scratch loss with the scratch win. So ended up slightly, a tiny win up for the day on a net. And this stock ended up kind of pushing back down all the way. Made one more last hurrah up over here at 12:30. But then ended up having a big sell-off and then a decent rebound to end the day. Pretty choppy stock and just didn't end up going anywhere really after the first 30 minutes. If you look at that, here's the average price. They got the fill, and then price pretty much just went sideways for the rest of the day. So I guess ended up being a nice exit over here. That just felt a little bit more instinctual as to, okay, this stock really should have been taking off here. And the fact that it's not means that, I'm going to get out of this and, not hold my luck. So the change in the hit and run has to do with actually the few stocks that I had day trades and I turned into overnight swings. So there were 3 stocks that I did that for. The first of which was Tesla. I'll call them out over here in general. Tesla. Next one was Carvana. And then the final one was Soun, S-O-U-N. So still holding these. They're all valid on the, still holding Soun and Carvana. I closed out Tesla. Both with the latter two are still valid on the D1. But in the theme of leaning into and sticking with some trades longer, I decided to do that for my day trades, even though I'm not taking any day trades past 2 p.m. And I am still trying to bid better on the day trades. So on those, right, I think I did a pretty good job of bidding better for most of my trades. There's ones that I could have bid a little bit better, but on all of them, I never chased that top bar. I always bid into that top bar, whether it was the top third or the top half. Now with let's go with Tesla over here, right? And I think there's a trade-off, I guess, which I saw with doing this. So when you take a day trade, right? I size a day trade according to, I take a good D1 chart. But I also, Tesla's not the most picture-perfect D1 chart, but it did set up pretty well, given that it had found some support at the 100-day SMA. and it was pushing up higher, and we had this nice gap. So great risk reward on that Tesla trade. But yeah, I mean the stock. When you hold, I guess when I was holding day trades as swings, I did 3 of them this week. Because my day trades are sized for day trades and not sized always to take a move on the D1 chart, I had to trim my size down before I decided to swing the trade. So that meant I had to take some trades as a partial loss, right? And then have a smaller position that is willing to take heat on and swing on the D1 chart. So the 2 issues was, one, I'm starting the trade immediately with a partial loss that I'm trying. It's psychologically you kind of want to make that back up, so you're starting with one hand tied behind your back. The second part of it was that I just ended up having way too many swings that I was trying to manage. Right, I had my normal swings, which was PLTR, PCT, GDS, and 2 or 3 swings a week for me is a pretty solid deal, but kind of went all over the board with managing and holding these day trades as swings versus, and a lot of them, they ended up being better off as like overnight swings, or maybe like hold it for 2 days at most. You're not trying to push your luck too hard on these. So and if you miss your exit on some of those overnight positions, then you're just managing the trade and managing the position for a much longer period of time. And, that's sort of the drawdown I felt for me in terms of turning day trades into swings. Now, it works fine if you don't have to take that partial loss, and you always size it for that D1, right? Like if you're taking, options with a fixed debit, if you are taking, a call debit spread, for example, where you have that max risk fixed, you have the ability to have a day trade and turn it into a swing if you don't reach your profit target in time. I think with shares, you can do that, but if you keep that same size for day and swing, then your risk reward immediately gets larger on both ends, right? You have more risk and more reward when you turn a day trade into a swing. So because of that, I decided, all right, well, I'm going to keep my day trades as hit and run because the price action has been choppy the last couple of days. I'm okay if it doesn't go against me. I'll give up some bigger winners on the upside so I can take some more smaller consistent winners on average, which was that was sort of the implication going into the net trades at the end, where I was kind of maybe a little bit too nimble justifiably, but I was sort of going the opposite direction as holding it too long and just having a pretty short game plan where I'm in the trade, and then if it goes against me, then I'm going to get out of the trade, get a great entry, and just take gains into strength when I can. So let's talk Tesla. There's a D1 setup. I talked about that. Support at the 100. We have room to that gap fill. So I think Pete had taken this on the 8th at like 300. And he took a nice $3.50 on that day trade. It was a really nice move. Stock pulled back, and I got in on Tesla on a better bid. Look at that. I got in at 301.50, which was kind of the bottom of this candle. I felt like that would be tested, which it was. So I got a nice fill here. Stock had a choppy pullback, and then it popped up over here, came for another double top, and then a big round of selling all the way down to the 100 SMA. I was long 30 shares here, but I was willing to size a move all the way down to 21.50 as a max loss. So I really wasn't sweating this move down, and it closed kind of near its high over here. We got another test the next day, and then Tesla gapped up over here, and I took gains. So I guess I should specify what I did. So on the close, I decided to swing this. So it closed at 297, but I needed to take some off. So I took off 1/2. So I was only swinging 15 shares, which meant I could take a $30 move on the D1 chart. Pretty volatile stock. It's newsy as well. There could be a news drop that comes up, hits me $30 downside, and I just want to be able to eat that as a max loss and not have to stress that, maybe it's something more than that. So I took half off here as a partial loss at, let's let's see here, at 298.90, and then I took the remaining over here at 305.60 for a win, and that netted out to basically a scratch on the entire trade. So basically scratched out Tesla. Obviously, it ended up doing much better in the coming days had I held, but I was looking for something, I guess, smaller or shorter in duration, so which is why I didn't hold as much. But yeah, ended up being up all the way up to 322 and potentially could go even higher, although it's hitting some resistance here at the SMAs. So that was a Tesla trade. Yeah, I mean, looking back, I think, look, if I decided to not let this turn into a swing, once I got this move here, I would have set my stop at break even. So that way, if it goes against me, I just would scratch out of the trade and not have to worry about any taking any losses. Also, not a bad place to take gains on the ad near the high of the day, right? I'm hitting this high, yeah, 303.58. That's $2 on this trade, right? That's a nice $2 win. Take some gains there. And yeah, like live to see another day. So, yeah, I think would have personally, I think a hit and run strategy on these day trades would have been better. Because it's, even though it was a more profitable strategy holding into it, there's just too many positions to manage for me. And it's just a lot of swing exposure that doesn't quite match my market confidence is the thing. Where if the market's sideways, right, I don't want to be long like 8 different swings at once, right? 2, 3, maybe 4 swings that I can manage, where if something goes against me, it's not like I'm just taking a massive hit out of nowhere. If I'm holding on to these day trade longs for a while, they're not really going anywhere. Like, it's not really great. Okay. So that was sound. Next trade I took, Tesla. Next trade I took was Carvana. So Carvana, same deal. It had broken out of this all-time high over here at June 6th. It had a nice kind of this red day here selling. Not a ton of volume on that day, and then it was compressing. So I actually took it over here on July 9th. So you'll see on the 9th here is when we got this gap up and this strong move lower. If I look at Carvana on the 9th, so market gapped up. It didn't quite gap up with the market, but then when the market sold off over here, 11:15, you saw how this stock was actually able to get to its high of the day and find some support. So it's getting some volume, but pretty low R vol. Then we got a nice pop up on volume over here at 130. I knew this bar would be retraced, so I bid on Carvana at where is this? At 352.30. So about maybe about the upper third of this bar is where I bid. Came back to 351. Tested the 8 EMA. Tried to push up over here through the high, and then got rejected back down. So again, decided to hold it as a swing. And I took half off Carvana over, I think it was like 30 shares. So I think I sized it to 9 shares. That way I can take a pretty big move on the D1 all the way to the 50 SMA, which was like maybe $50 lower at the time. So took a pretty big move. Popped up the next day, but I missed my exit. My target was actually 36.60, which was more into this red candle. So didn't quite get there. And had a chance to maybe take a scratch on this position, but I chose not to. And then the stock kind of just went against me, kept testing that support, popped up higher over here, tested that support, came back down. And then also today on Monday, had another pop up higher, testing that support. So stock is just kind of compressing right now. But again, what I'm talking about here is that for these day trades you're holding overnight, you got to get, out on these long green candles when you can, I would say. Because that's sort of your only opportunity to try to basically, otherwise you may have to wait for a while, right? And turn it to something much longer. So that's sort of the lesson that I learned on Carvana, especially when I'm taking the smaller loss here. So I took a $1.50 loss, which means to break even, I'd have to take a little bit more because I scaled out 2/3 and took a $1.50 loss. It means I have to take $2 of win on the upside. And since I got in at 352.30, I'd have to get out at 355.30, right, which would have been somewhere over here. So still in Carvana, holding that position. It's again holding that 8 EMA, kind of compressing right now, not really doing a whole lot, but maintaining this upward sloping trend line, and I think it has a chance for another leg higher. All right, last one over here. Day trade I turn into a swing is Sound. I keep wanting to say Sound. So this is the Sound chart here. Now I took this as a day trade. I'm going to do the day trade setup first over here. So took it as a day trade on the 8th. I believe market was having a pretty dead day on the 8th. Let me check again. Yeah, pretty choppy dead day on the 8th. Not really doing too much. Looks like I managed to pop out of that one. So I got in here at 1303. So we got this breakout candle. I bid halfway and I got my fill halfway. We got a nice pop up here. Immediately 20 cents in the profit. I was taking, I think, 600 shares of Sound. Now stock goes against me. Sells off. Test VWAP. Couldn't get quite back above it. And then sells off over here. And then closes right below the VWAP. So this is, again, one that I decide to swing. So I exit 3/4 of it at 1273. And I'm looking to get maybe, let me see how much I needed to get here. Yeah, I needed to get to $1.30 here. So 14.33 is when I would break even on the trade. Now I'm going to go back to the D1 and show you the setup. So as you can see with Sound, pretty choppy stock. Nice run up, pulled back over here, chopped around in this area, found some support. I think there was a nice entry over here, probably on the 1st or the 30th, as it broke through this downward sloping trend line and they broke out of compression and through the SMAs. But yeah, the stock broke into the gap here, and also was testing the top of this trend line, which had formed through some of the AVWAPs. But I think it hit, there's probably one major AVWAP from somewhere over here that it hit around 1350 that it sort of got stuck on, and that provided some resistance to the stock. So there was Sound there, and yeah, so still swinging that stock at the 4th original position. I sized it so I can take a move all the way down to like $9, and I'll still be okay. If it breaks through that, then I got to get out of the trade. And you can see it tested this and then had a decent sell-off, testing that AVWAP-E, breaking through the 8 EMA here, but does that quite a bit. It's a pretty choppy stock. In the meantime, what I'm doing, I'm still holding the shares, and I sold the July 18th 1350 calls for like a 33-cent credit. So just reducing my cost basis on the trade by like 25%. And I may take another. We'll see how it ends up this week, but I can sell another at this resistance at 1350. And the great thing is if it breaks through that, then I just take the credit on the calls and then exercise that at the price, or I can close the calls for a loss and I can take gains, on the shares over here as it breaks up. I originally took sound as well because if you see this gap on the D1, it goes all the way to 1525. So I had a lot of room into that gap that I felt it had a time to run to, and it's still valid on the D1, so it can come up, test this level. We'll see if it can break it or not. But I have time until August 15th, so I have a whole month to stick in this trade and have it work in my favor. So just got to be patient with that. But yeah, it's one of those things where again, if I decided not to take the partial loss, I could have taken the profits on the open over here, right? Open at 1320, take the small win, get out of the trade, way in the sidelines. Another high over here, finally tested the same high, 1339. There is your true double top, and then it sold off after that. So just had to be nimble again on that one. So still in that trade, and the final trade that I took that was another swing was my FTNT PCS. So I took this trade on took it here on July 8th. I took the July 24th 101 100 PCS for a 21-cent credit, or July 25th, sorry. So that doesn't expire this week, but expires next Friday. We got this long test of the 50 SMA here that pushed up. So I didn't think I'd get this massive test, but we got this big test up. So on this drop is when I got my fill on this guy, and then we start to rally up pretty strongly at close of day. Next day, similar thing. And then on Friday, we got this massive, Thursday, we got this massive red candle through all the SMAs on heavy volume to test this support level that I was leaning on, which was around, we'll call it $98, $99 here. And then today on Monday, rallied back up above the 100 through the VWAP here, and then testing this 50 SMA over here. So pretty choppy right now. I am respecting this long red candle here. This tells me that it's getting pretty choppy. There are some sellers getting involved at this price. That's what it looks like to me. Yeah, and so in this level, 105, that's a pretty decent level. So there's certainly some resistance happening over here, but on the D1 chart, it looked like there's probably some resistance, maybe 110. Some resistance kind of around here, maybe call it like 104 to 105. There's some resistance there. So just kind of a choppy stock. I don't need it to be like absolutely perfect. I don't need it to shoot up. I just need it to hold above my entry price, which it is, right? I'm at 101, so that's just below the 100 SMA and the 50 SMA. So we can hold that for another week, 2 weeks-ish, week and a half-ish. Then I'm in good shape. If I do get a nice pop-up, I may decide to close out the spread early, given that this sign was a pretty big warning shot. I think it's probably something that should be respected. So I may potentially get out of the trade early if I don't see some nice follow-through on this guy, and I don't see this red candle start to get erased. If it gets eaten up here, then I feel much better about staying in the trade. If we start to stall at the halfway point of the 50 and we're not able to get above, I may take a small loss and, live to get another trade. So, long video, but those were all of the trades I took. A couple things that I'm trying to focus on for next week. First thing is keeping the day trades as a hit and run. Second thing is just taking, 2 or 3 really nice swing trades for the week. I think I did a great job of that last week. I had 3 really nice swings in PLTR, in PCT, and GDS, and all of them actually would have been a little bit more profitable had I held them 1 or 2 days longer. But I scaled out of them, which was great. I bid better, which was great, and just those 3 swings alone was like a 2% account gain. So again, it's just a matter of, I think, cutting out some of the fluff here and keeping the day trades to a hit and run where I'm not taking too much heat on them, able to get a couple of nice small wins per week, maybe get another 0.5% to 1% gain on that, and I should be in good shape. So that's kind of the tweaks I'm making for this week. And I'm currently long 4 positions right now. The one I took today was WDC, which we'll talk about in the video next week. But that's a nice better bid that I'm looking to hopefully should do well. It was a pretty nice setup, so I'll just flip that real quick. Breaking out of that compression, there is some major trendline resistance around $69, so that's when I'll plan to take my gains. But yeah, I have four longs right now. So may put on one more, but I'm limiting myself to 5 in my basket of longs. So I don't I don't get over encumbered here, especially when the market is still it's still bullish. If I look at the D1 chart, we're still bullish here, but has been in a sideways movement for the past couple of weeks. So I don't want to load up before a pullback, which may happen. I'd rather save some powder for after a pullback. So just keeping it light for this week. And I think we'll get some more information on earnings, hopefully this week as well. And, able to take advantage of some nice moves, especially intraday with all of these earnings releases. Thanks for watching, everyone. Hope this was helpful, and I will see you all in the next video.